Welcome to CBD Street Talk. In this edition, we cover the World Cup and equity markets, the conflict in Iraq, and the extension to the homeowner grant.
There is no doubt the World Cup generates a massive amount of attention and with it brings a massive amount of passion. But does it have any impact on the equity markets? Looking at history, there is a clear pattern of outperformance by the winning team in the weeks after the World Cup final. On average, the victor outperforms the global market by 3.5% in the first month, a meaningful amount, although this tends to fade significantly after 2 months. But sentiment can only take you so far. The winning nation doesn't tend to hold on to its gains in the very next year. Usually, it underperforms the global market by 4%. So the message seems to be, enjoy the gains while they last. All the winners since 1974 have outperformed in the post-final month, with only one exception, Brazil in 2002, due to a macro event which caused a currency crisis and a deep recession. Their equity market dropped by 19% in the month after the World Cup. So in the absence of an economic crisis, the winner tends to enjoy the spoils in the market for a brief period of time.
As many predicted, it seems Iraq is falling into chaos. You may be wondering, with Iraq an oil producer, what does this mean for the oil price? Well, the oil price currently stands at around $107 per barrel. When the Libyan civil war began, the oil price surged to $120 a barrel. On a daily basis, the world requires 90 million barrels of oil per day. Iraq produces 3 million barrels and exports 2 million. So it only accounts for around 2 to 3% of the world's daily consumption needs, which is far less than what we rely on Saudi Arabia, the US and Russia. The US currently produces 15 million barrels per day, which is just shy of their daily consumption needs. If Iraq descends into chaos, will this cause markets to fall? Well, it's likely, however the fall may be temporary. Will oil prices rise further? Perhaps, but the spike will also be temporary until this 2 to 3% gap is filled. The chart shows the VIX index, otherwise known as the fear index, and it's a good indication of market volatility. This big spike in early 2014 was the Ukraine drama. As for Iraq, it appears the market had always factored in it would turn badly, as it has. A reading below 20 is regarded as all is well, and over 30 and the market is worrying again. During the GFC, the index was at around 70, and it currently sits at 12. So in a nutshell, the market continues to track sideways as it balances generally good news coming out of the US economy with the bad news from Iraq.
The state government announced earlier this week that it will increase the first homeowners grant to $750,000. The $15,000 grant is currently available for properties up to the value of $650,000. The New South Wales budget reported that the number of first homeowner grants for new homes grew rapidly over 2013 to 2014. In the first 4 months of 2014, the number of grants paid for new homes was 46% higher than the corresponding period in 2013. Targeting home buyer assistance towards new homes has had a positive effect towards housing supply. The government believes that increasing housing supply should slow down house price growth, as well increase housing affordability.
Thank you for watching this edition of CBD Street Talk.
We'll see you next time.
Go the Socceroos!